Welcome officially to the Market Watch Group Weekly Market Prep. I say it every week. This is my favorite day. It's my favorite day psychologically. It's my favorite day because it really gets us in the right place, the right frame of mind for the week. We've had 2 days since we've been processing risk, right? Not quite 2, but pretty close. So you sort of decompress from the week's risk, and now you get to look at the market as objectively as possible, right? That's what we're looking to do, is be as objective as possible in assessing market conditions. We understand the market. We understand, is our watch list on point? We understand if there's setups starting. We understand if there's concerns that we need to be aware of. All of that just sort of puts us in the right place to say, this is what we're thinking about for the next week. Now, disclaimers as always. Remember, educational, illustrative. We are not brokers. We are not advisors. We don't give guidance. Guidance can only come if somebody is very familiar with your personal situation. Here's what I know about your personal situation. You want to be a successful trader. Awesome. That's the objective. Perfect. Here's our agenda for today. We'll posture. We'll look at all 6 components. We'll talk about what's good, what's not, what's concerning, and then we'll see where it puts us. We'll take a peek at the economic calendar. What do we have coming out this week? A big one. A big one. And the last big one was good. Obviously, we know that we are addicted to the Fed right now. The Fed is the market's crack. Everything is about how will the Fed interpret this? What will the Fed think? What will the Fed do? Is it sooner? Is it later? When the interest rates? Okay. Do we like markets like that? No, I hate markets like that. I hate when I feel like we're so reactive and subject to the Fed. You can go back over the last 20 years in various places and find recordings of me bitching and moaning about markets when we just can't get away from the Fed. It is what it is. It's important that we acknowledge it. What are we looking for? Inflationary data. Are we going to get that cut? Are we going to get 1? Are we going to get 2? Is it September? My theory, I'm actually, interestingly, throughout the year, you've seen some shifting where early I started a little bit more like, oh, we might see this. And a few members are like, I don't know. And now it's like, I don't know if we're going to get it till November. And some are like, maybe September. It's been an interesting little analysis as we've watched how the market has responded, right? As we've interpreted, particularly for small caps, how is this going to be influential? So we have the VIX with a bit of concern, and we have the dollar with some concern that showed up on Friday, where it's like, what is going on? So yeah, let's make sure we get everything on the table. We talk about it. We position ourselves to say, here's how we're going to handle it. Sector searching, maybe. I don't know. I feel like we've eliminated a couple of things. I feel like the watch list is quite strong right now. And I'll show you where you can find the group watch list for those of you who are new. So make sure you stay to the end. I'm going to do a little tour in Discord for those of you who are new, and show you where you can go find a bunch of resources right now and start like downloading a trading plan, download your record keeping, get the historical record of market posture so you can see how we've done this in the past and what happens in different markets. And right, you can go see this posture of ours for the past year and what happens in different types of markets. I'll show you where the videos are, where you can start learning about the different components of the market we look at and how to analyze it, and learn about the different components of your trading plan and how to start working on it and everything like that. So, okay, here we go. We'll look at the economic calendar. We'll maybe sector search, but I think we're pretty good. We'll look at the watch list and see if there is something that looks like a weak spot or anything that needs to be dropped off. We'll put together an early week opportunity list. It's not the shopping list anymore. It's not the shopping list. I'm going to actually change that right now. I didn't like the connotation that I felt. Shopping gives me the sense like I'm looking for something. But we don't go look for it. We let trades come to us. So what I want to do is talk about opportunities that are setting up. And we'll talk about the trading plan section of the week. If you're new, you barely missed the start of this cycle. So don't just dive right in. Our trading plan is broken into 8 sections. There are 8 sections to the trading plan. Now, when you're done, you can start adding more sections. It's your trading plan. This is just the basic. And what we do is we look to pick one. We look to work on a section of the plan every week. Now, we just started a new routine where some people are starting to prioritize elements of their trading plan because they've already been through a few passes. But if you're new, my recommendation is at least 2 passes. A pass is going to take you 8 weeks. Yes, last week we worked on section 1. This week we're working on section 2, etc. And you basically spend an hour a week dedicated to one section of your trading plan. That's how you eat an elephant, one bite at a time. Trading plans are overwhelming, so people have a tendency to not do it. And it is a crucial element. You should not trade without a written trading plan. That's what I say. Okay, let's pop into it. Let's get this out of the way. And I'm going to try to keep up. But as the group grows, I know I'm going to start getting more lost in the chat on the sides. But I love that there are people answering and asking questions amongst each other. That is part of what we're trying to do in the forums and the interaction within Discord, helping us build the community here. Okay. I don't know why this is not what I wanted to be on. Okay. I actually want to go straight to the posture. Let me pull this up. This is not a super pretty spreadsheet. But what it does, so like I said, there you can go in and download the historical of this. You can take this back and you can say, hey, maybe you were trading and you struggled back in October and November last year. Market kind of got into a corrective period. And you can be like, I wonder what happened here. And you can see our score dropped. It even barely tipped into negative, but quickly recovered, right? Quickly recovered so that by early to mid-November, we're saying, hey, let's get bullish again. And then we were bullish in November and bullish in December and bullish in January and bullish in February. You can see very strong score, great market. This gives you the ability to go back and connect periods of time with what we might expect to see from a market posture to see, oh, okay, where are we now? It's strong. Still nothing for audio. Oh, Greg, what a great comment. Troubleshooting for each other. He's exactly right. Those 3 dots can be very helpful to check on your settings to make sure that it's getting sent the right place first and foremost. That's a great call out, Greg. Thank you. Thanks everyone for helping with that, because there's just not much that I can do. One other thing, you can always I always troubleshoot things. I did it with my ice maker yesterday using ChatGPT. I'm like, this isn't working. What should I do? And it starts walking me through steps. Anyways, all right. Where are we? Where are we going to be? So I am June 23rd. We are at a 5.75. We got back to the 5 level and then just sort of slowly 5.5, and then we held 5.5, and then 5.75. So this is where I say, and let me pull up my chart. This is where I tell you that all along all of this, you hear people saying what? Negative things. Oh, inflation is this. Oh, it's gonna be a hard landing. It's gonna be this. It's gonna be that, and all of these things that they say. And at the end of the day, what have we seen price doing? Going higher. It's going higher. Price action is what do you see? This is where it's important that we recognize the difference between what we think, what we feel, and what we see. And then what? This is going to sound a little crazy, but I want you to throw out what you think and feel. What do you see? What you think doesn't matter. What you feel doesn't matter. What do you see? Price action doing. That's what's important to us. Okay? Now, we're going to take a step back, get the weekly. So we have our 5-year weekly chart up. Here's my scoring. Now, again, for those of you who are new, it's going to be a little overwhelming the first time, and then the second time closer, and then you're gonna ease into this. I about said ooze into it. No, ease into it. That sounds much better. Oh goodness. We are breaking the market down into 6 core components. They are listed here in column A. This spreadsheet works from right to left. So we enter new data here, and it just builds out to the right. Total of 10 points. Each component has its own weighted score. 2 points for long term, 3 for short term, etc., etc., etc. Now, each one gets scored empirically, meaning positive or negative. Right? We can go positive or negative. It's an empirical score, empirical number. So it's not 0 to 2. 0 is bad, 2 is good. It's -2. That's bearish looking. 0, neutral looking. 2, bullish looking. Okay. Now, feel free to throw questions if you're new, because the great thing is there's enough people who have done this now. I bet they answer before I do. And I actually will tell you that they always say, what's the best way to challenge how well you know something? Teach it. So this mechanism of having people help each other is very purposeful, because it helps you, who's like feeling more confident and that's been here for a little bit, to say, yeah, I think I can help with this. Anyways, people helping people, I tell you, it's a beautiful thing. Okay, so what's the score? The trend is very strong. And I want you to notice, this is part of the analysis, I have 2 very distinct looking trends on my chart, and that's on purpose. And we've been talking about that. That back here, let me make this a little thicker. Where's my thickness? There. Okay. This trend, all of a sudden in this area back here, went through a transition. And now is on a different angle. Right? And so back here, I believe we were a 1.0. And then it transitioned through here to where we are now a 1.5. Are we a 1.5? I thought we were a 1.5. I think I'm a 1.5. Yes, 1.5. So very quickly, obviously, that would be a 0. And the best you could see would be a 2. And the worst you could see would be a -2. And then something in the middle here, which you'll notice that looks just like that, would be a 1. We're measuring the trend. If 0 is neutral and 2 is bullish, when does the incremental numbers apply? Incremental meaning more than 2, or do you mean Incremental meaning I start to like deduct a quarter of a point or add a quarter of a point because I haven't established a new trend yet. The latter. Great. That'll start. Amazing question. First of all, that will start. In fact, that started here. We ended up, I believe, I'm trying to think where it was. Probably right through here somewhere, when it first like was above the trend line. That we actually gave it a +2.5, right? And we said, oh, I'm gonna score it a little higher. And then we actually got above a trend line again, and we did it again, and that's what got us here. So now that we're here, what would make me change again would be if I feel like we broke above this. Like this is where this trend line is. If we got higher than that, we're like, wait a second, this thing is continuing to push. So if it were to venture into this above territory, which obviously would take quite a while for it to get there, or if it breaks below down here, we would lose a quarter of a point. But as long as it stays where it is in this certain path, this trajectory, there it is. But once it breaks, we're not like, oh, it broke it, so now it's a 0.5, right? We just say, oh, it broke, minus 0.25. If it makes a lower low, we'll give it another minus 0.25. And then we'll see as it's going, what we're trying to do is adjust on the fly until a new trend is established. And then we say, did we get it right? And if we did, we leave it. And if we didn't, we adjust it. We're trying to be adaptive, right? We're trying to not be too rigid in our thought process. And I feel like it's worked. I feel like we made the transition from a 1 here to a stronger 1.5 here. I feel like we saw that, we caught it, and we adjusted. Let me know, anyone who is doing it real time, if you think, yeah, we actually did. He's right. We were talking about it. We were trying to figure out what we thought it meant, and this is what we settled on, and here it is. We got it. For this time, no change, right? Like I'm 1.5, that's a 1.5. It's the same here. And to Don's point, this is where it's hard. I'll tell you this, Don, it's harder on the short term than on the long term. When you get into something like this, it's easy for you to be like, well, wait a second, don't I have some touch points that I could theoretically draw this line and say that's negative? So, yeah, I think you could make that argument. But we don't want to. That's my point, is bullish markets will stay intact, especially if the underlying long-term trend is strong. And so when it goes through these little transitions here, this only ended up being 5%. I was like, this might end up 10, which would have been down in this area, back at the bottom of this trend line. It didn't, though. And I'm glad we didn't adjust our score. We did adjust our score. But we didn't just be like, wait, now it looks negative, so we're going to hurry and flip it. We said it broke, that's a minus 0.25. Then it had a lower low, minus 0.25, lower high, minus point, and it eased. It eased. Let me see if I can show that to you here. Let's see. So we were at 2, then a 1.75, then a 2, then a 1.75, then a 1. So right here, we were at 2, and then it broke support, and then it made a lower low, then a lower high, and a lower low, right? And so those things are impacting our score. It dropped pretty steadily because of that. But then it stabilized at a 1. And I believe, looking backwards, that was the correct assessment, right? It stabilized here and then very quickly moved back up into, you'll notice that these trajectories are actually quite similar in their angles. It's almost like this line just continues. So we got pushed back one floor and then we started moving again, and we're already way past where we were prior. right? And so what our trend score was back here is probably going to be what it is right here. And that's what it should be. Those look the same. That's the strength that we have. And so my score is a 1.75. And if I go back and I look at this in that prior time, it was a 2. And if you remember last week, I said I'm on the fence where I might push it to that 1.75 to 2. That's where I see it. I'm going to leave it where it is for now. I don't need that extra quarter of a point. It's not like I'm like, oh, I need to make it exactly the way that it was. I'm recognizing they're very similar in how they look. So 1.75. Volume. So what did we do? Real quick recap. 3-year weekly for the long term, 6-month daily for the short term. But we start on the bigger picture, then we zoom in and key in on the most important data that helps us to reach our conclusion. SPY, volume. Now what? We're going to change it to a 1-month daily chart. 1 month daily. So I went from 6 months to 1 month. Now what am I looking for here? Volume. 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 Okay. So I have a buyer volume. I have a buyer volume, even though it's a red candle, because it went from this close to this close. So it gapped up and held. But then I have a bearish engulfing day. I saw that too, Stephen. And the fact that it was on the very last one, I'm going to leave that one out. I'm going to leave that one out. If it was in a little bit, I would consider it, but I'm not going to now because I don't think it's relevant. Certainly, you can play with that in there if you want to. I think if you do, it would be interesting what you ended up with. So I have 2 for, 2 against. 2 to 2 is a tie. Tie goes to the buyers. So this to me is a 0.25. That's the empirical score. We were at a 0.5. The problem is these days came late, right? These last 2 came late in the day. So I'm discounting, like I said, to Stephen's point, there is a volume back here. Amazing call out. Thank you very much, Sandy. She's exactly right. So what I have on here, this is me where I make assumptions sometimes, is a 20-day moving average applied to volume. That's average. It's a funny thing that people always talk about average volume, but it's like, well, how do you know what average is if you don't have it on your chart? Right? I want to see the smokestacks. Where are the days that are above average? Those are the important days. Those are the more meaningful days. And I actually missed one. So I got to start over. I'm a little bit, I got to start over. I might, now I'm hesitating on my own analysis. Give me a second. I'm discounting this one because it's going to disappear when the market opens tomorrow. So if you want to analyze it, you could, but that disappears when this next day shows up on this chart. This day falls off, so I'm going to discount that day. But I actually missed one in here. So I have 1, 2, 3, and then 2. So I actually have 2 selling days, 3 buying days. Tie goes to the buyer, but with only this much, yeah, I'm still actually going to go 0.25. Right? We were 2 to 0 or 0 to 2 the week before. We had 0 and then we had 2, and I was like, I'm going to leave it like this. I'm going to say it's a 0.25. Where would you find this chart? This is going to be a chart in your this is just a price chart. Typically, you're going to find this with your broker. So this is using Thinkorswim, which is a platform from Charles Schwab. Used to be with Ameritrade. Before that, Thinkorswim was just Thinkorswim, its own broker. So this is their platform. Now, if you go into any platform, you're going to have charts. And one of the things in this journey of yours is to find the charts you like the best. I like these the best. A long time ago, I had a different set of charts. And they used to be a part of this, and then they sunset that. They were called profit charts, and I loved them so much. Profit charts. Anyways, so I would say, you know, whatever platform you're on, whether you're with Fidelity or E-Trade or I'm blanking on brokers, Charles Schwab or Webull or Robinhood or Tastyworks or whatever broker, Interactive Brokers, right? These are the brokers, and every broker is going to have, typically they have a couple of different trading platforms. They usually have an online, like a web-based platform, and they'll usually have like a more sophisticated platform that you can download, and it's like they're like Power Trader Pro is I think what Fidelity calls theirs, and they're just more sophisticated platforms. I would absolutely recommend that's where you migrate. I think this is the best platform. I've used it for almost 20 years now. It's a phenomenal. They've got great charts, great order tools, great options analytics. But certainly, feel free to go into the Ask a Question page on Discord and be like, hey, give me some recommendations for brokers, and you'll have people throw out who they use and what they like or don't like. So use the resource. So the once you have a chart, you have the ability to play with it. So you can put moving averages, moving average envelopes, Bollinger Bands, things like that. You can put indicators. So what do I have? I have volume. I have a 50-day exponential average on my price charts, 20-day simple moving average on my volume. I have a 7-3 slow stochastics, and I have implied volatility, which is an option measure. And that's it. Like, I like to keep my thoughts. I like to keep my charts pretty clean, right? And so you'll see people who will be like, they'll have a stochastics, and they'll have a MACD, and they'll have a parent, right? They'll have so many different things. Here, let me show you where these are in this chart. Right here, this little bottle. These studies, these are all the indicators. This is starting at ADX, and I have all of these things that I could put onto a chart. That I could with a C, not should with an SH, could. You could get your charts really, really, really just messy. And so I like to, like I said, I like to keep my charts very clean. I am a purist for technical analysis. What does that mean? Price is king. That's how I define my analysis in 3 words. Price is king. Everything else is a derivative of price. A moving average is a derivative. You add it up, you divide it, it's a derivative. Stochastics, you have a calculation that has 7 days of a calculation versus 3 days. It plots 2 lines, and we look to understand momentum from the indicator, right? The indicators try to help slice and dice price action and spit it out in a picture, because pictures are sometimes easier to see. In fact, I'll even tell you right now, one thing I didn't do when I loaded my charts back up was I didn't resize. I don't like these things being big. I like them down here where they belong. These are supplements. This is the star of the show. So I hope that makes sense. Okay. Good questions. I got to start speeding up or I'm going to take too long and get to the watch list. So I'm going to just kind of crank through it, and hopefully I'm going to probably take 5 or 10 extra minutes, so I apologize in advance. Okay. I am going to drop it to 0.25. I dropped my volume to 0.25. I think it made more sense. Now, real quickly, remember I do a quick little check and balance, a little sanity check at the end of this analysis. This is where we started the chart. So it actually, from the starting point, fell a little, but then it rallied and then it ended here. So if I just connect these two dots, I'm going higher. So does me going higher justify a score of a positive 2.5? Or possibly even a positive 0.5? Yes. If I looked at this and said, my score is negative. If you're like, I see negative volume, I'd be like, okay, how is it going higher then? It's really hard to go higher on negative volume. It could, right? It could. But we would really need to have a good explanation for why that was happening. Because if we're scoring this negatively as we watch it march higher, there's a disconnect there. And we need to try to rectify that, because that's gonna throw you off in how you analyze the market. I can tell you that. So I'm a 0.25. Looks good. Okay. Let's move on. Let's crank through these real quickly here. I'm looking for two different things here: appetite for risk and money flow. First, appetite for risk. I'm looking at the NASDAQ, which is tech, Russell, which is small caps, Dow, large caps, S&P, broad market. And as I see how these things move, I'm going to understand better, is the market looking to take on more risk, or is it looking to get more defensive? How will I know that? Well, the NASDAQ, that's the primary level, right? When the market's bullish, people want to make more money. Where are they going to go? They're going to go to technology, because that tends to lead bull markets 90+% of the time. Okay, well, what do we have here? 200 days. Remember, 200 days still has us going back last year and catching part of last year's correction before we had this year, what we've had subsequent to that. Right now that we've had it bottom out late October, how have things moved since that bottom? Who's on top? NASDAQ, significantly so. Then the S&P. Then down here we have the Dow and the Russell in the fight for third. Fight for third. So the fact that we're starting like this makes me start bullishly, right? Like this is a good bullish start. Looks great. What we're wondering is how bullish is it? If the NASDAQ, if the Russell starts moving into a leading position, that gets more bullish. That's the market saying, hey, things look great. I really want to try to make some money. If I really want to try to make some money, am I going to go buy Microsoft? Well, maybe Microsoft because it's tech. Am I going to go buy, like these great stalwart companies that are hard to grow? Or am I going to go buy small caps? I can get 30, 40% in a year, right? I want that 30, 40%. People start getting where their appetite for risk increases. And that's what we're on the lookout for. Have we seen it? Let's go find out. So here we go from 200 days. That's about 9 months. Now I'm going to go down, bottom right-hand corner, you can see. Now you might be wondering, how do I get these charts? Well, like Sandy told us, they are under resources. You can find all of the chart, anything that I use, any one of these sites where you're like, well, I like that economic calendar. Great, it's in there. I like these analytical charts. Great, it's in there. Oh, I want the Fed. It's all there for it. You can find it under the resources. Absolutely. Thank you, Sandy. We drop down, and what do we see? Still the NASDAQ on top, still the S&P in second. Now we have convergence amongst the battle for third. Okay, so who, as we move into 66 days, which is 3 months, you'll notice now this is all post-correction. You can see this clearly, the NASDAQ has moved back into that leadership position in such a strong way. We drop it down to 66 days. Maybe. 66 days. 66. Whoa. Okay. Well, if you go back to 2000, you can see that small caps have outperformed everybody else. That is not what I wanted to do. However, 66 days. 66 days. It took too many sixes. Yeah, apparently so. NASDAQ, S&P. Oh, this thing is back and forth. I don't see it one way or the other. I thought maybe this thing could give us an extra score, but no. This looks bullish to me. It's a 0.5. It's not very bullish. It's just like bullish, right? It's not neutral. It's definitely bullish, but it's not reached where we get to that 0.75 level as of now. Yes, what a great summary press. My God, amazing summary. Let's take a peek at the road ahead. 22 days. What have we seen here recently? Exactly more of the same. You can see it's very much just mini dichotomies of the previous version. Who's leading? NASDAQ. Who's second? The general market. What do we have going on at the bottom? This battle for third. If we see the small caps pop, that's what would move us to a 0.75. That's what would say, oh, if we want to, if people say, hey, what's going to get us back to that 6.5, 7 market that we saw back in January, February, March that was so great to trade. It's the Russell moving back into that third position. It's just a couple of things. We're very close to that. Very, very close to that. Okay, so I'm going to leave mine alone at a 0.5. Let's go sector rotation. Same analysis. Same exact analysis. Now, instead of using the 4 broad markets, we're going to use the sectors. And the sectors are going to help us understand where are institutions moving money. What does that do? It helps us to, first of all, better understand the market. Second of all, it helps us to understand what neighborhoods do we want to buy houses in, right? Where do I want to go? Where are institutions moving their money? Because that's where I'm going to. Well, clearly, technology and technology's right-hand man / woman, whatever, right-hand person, communication services. Boom, boom. That's tech right there up top. Who's close? Financials. They're trying to hold on. And industrials. Those are the big 4. Consumer discretionary is like, well, it's come back a little bit here. You can see it's still second from the bottom, but there's been a little bit of a move. We'll see if it starts to show up later. Let's keep going. Now we go to 133. And what do we have? Who's at the top? Technology, communication services. Technology, if I were to go back in the year that the group has been working, technology and communication services has been leading a vast majority of the time. It has made up a significant amount of my trading. I've traded a lot of Microsoft and Apple and chips, right? NVIDIA, TSM, Micron. I've traded Meta. I've traded Google, some Netflix. Those are all just strong up in there. So who's in third? Financials. Who's in fourth? Industrials. Now, at times when technology and communication services ebbed, what would we see? Industrials and financials would flow. Great. They're not all cycling at the same time. So it's important for us to recognize that. And that's part of what helps us find trades. Not just have like all the trades come at one time, right? Because it does sometimes feel like windows. Okay, now let's jump down here to 66 days. Now this is where things got fuzzy. Why did they get fuzzy? Because we saw a big surge 2 places that we didn't like. Number 1, energy. We didn't like it because that puts inflationary pressures on the market. We were right. We saw it happen. We said, ooh, the longer this stays, the more likely that is to hurt inflation. And when the next inflation report came out, Energy was one of the number one culprits. Exactly what we talked about is exactly what happened. But energy has fallen off significantly. In fact, on this chart, you can see energy, who was up here, is now at the bottom. It's at the bottom. And what have we just seen this week? Technology, our leader, has crisscrossed above utilities. Now, utilities is still in a leading position, but utilities really hasn't done anything positive since back here at the end of May. It's been steadily dropping from here. So last week was the first time that I raised the score to a 0.25. And I want you to notice that now we have utilities retreating. That was defensiveness that we were like, ooh, watch out, that could be defensive. Well, not anymore. Now it's kind of retreating, and now I have technology and communication services. Remember, communication services, the one that first popped above. Now we have technology joining in a big, fast way. And then down here we have, it's Staples actually. So just these two. That's enough for me. Technology and communication services surging with what we already have as our base. Remember, we already had 200 days on 133 days with a strong beginning. That's why we want to make sure we understand that strong beginning. I'm not even on the fence. I'm going to a 0.5. We were a 0.25. I'm going to a 0.5. That's this one here. But let's take a look at the 22 just to see. And you'll notice, what do we have? Technology showing us some blue skies. Then we have communication services. Then we have discretionary. And discretionary is nice because it has been out of favor. So we would love to see discretionary come back in. Back in last year's April, May, June bull market, those were the three that led us: technology, communication services, consumer discretionary. Okay, so I have raised one and lowered one. Almost. Raised one, lowered one. Now what? Let's finish with the VIX. Oh, the VIX. You have been a little hard to read. Anyone struggling with the VIX recently? Are you feeling okay about it? And let's see. You were already a 0.5 on sector, Stephen? Ah, okay. Yes, Press. Love that. Love that summary. So good. Okay. What is going on here? I'm going to pause, and I'm going to turn this over to somebody else to do the analysis, because I'm like, what are we doing here? Okay, so let's talk about this. We broke a line of consolidation and established this as our low, and technically this as our low, right? And we made a higher high here. We scored that. We scored that. We dropped our VIX score. We scored that right there, May to June. May 26th to June 2nd, 1.5 to 1.25. And then we've been sitting here for 3 weeks. So we scored this right here on June 3rd. We scored that happened. And then from here, we went down, and it went up, but not really like a full cycle. Then it finally came down here, but it's going up, but it hasn't really gone up a full cycle. I am gonna take it down. I think 1, 2, 3, 4, 5. Yes, there. Minus 0.25. Why? Higher low. A higher low. Now, the VIX, Sandy's exactly right, cost of options. But why is the cost of options important to us? because as the cost of options accelerate, there is one thing motivating it: fear. Right? Fear. Fear motivates options to be more expensive. As people get nervous, they're willing to pay more if they think it's going to protect them. Whose fear? Institutional fear. And, even if you're like, they're like, well, they're just hedging. Well, they're hedging because they're scared. If they weren't scared, they wouldn't hedge. But when they hedge, what do? They buy options. Well, if you're hedging a $20 billion portfolio, you're not buying a few. You're buying a bunch. And as you buy a bunch and other people buy a bunch, what do you think the market makers of the options are going to do? Oh, everybody wants my options, huh? Okay. Oh, you're right. We only had a 4-day trading week. So did I not score that last week? Now I'm a little bit like second guessing myself, Stephen. You're right. It was only a 4-day trading week. So technically we would have had this, but I didn't score it last time. And I'm not remembering why I didn't score it last time. But I have to. I mean, if I didn't score it last time, that's a mistake, actually, I think. I think that's a mistake. Oh, no, I remember why. Because it was like by the penny. The high of this was 12.68, and the close of this was 12.66. It was 0.02, and it didn't actually do it. But now, okay, I remember now. My short-term memory is so bad. I put on a preemptive hedge because prior to the market close, it was up in here, and it was ahead. And so it was enough at that time that I did put a hedge on. And I acknowledged it as a little bit of a speculative hedge. Did anyone else? I think it was that was last Friday, not yesterday Friday or 2 days ago Friday, but the week before. I did put a hedge on that I'm still holding. Why? Because we're still moving higher, even though it looks like it could revert. It's a bit of a choppy mess right now, the VIX, unfortunately. Yes, press candlesticks. Red and white, great call out. White is bullish, going up. White means that it opens at the bottom of the candle, closes at the top. Sorry, I should make this smaller for these. And okay. So if I look at this candle here, it started at the top of the candle, closed at the bottom of the candle. That's why it's white. Red. Here it opened at the bottom, closed at the top. That's it. It's relative to its close. The shadows tell you how high or how low it went. Here's what I'll tell you about candles, though. Different charts will draw them differently. Sometimes it's green and red. Sometimes it's white and red. There are some subtleties. That's a great call out. I think I'm going to do a working session on candles this week, press. Fabulous call out. Working session, Tuesday night, candlesticks. And Stephen is posting something very helpful as well. Funny story, I used to do traveling, I used to travel on the road and do workshops and stuff. And one time, somebody in the company found these flashcards. And then everybody went out and bought them. And as I was walking around the hotel, I keep seeing people quizzing each other with candlestick flashcards, and I'm like, this world has turned crazy. It was like 15 years ago now, but anyway, it was pretty funny. Okay. I'm going to lower my score. I'm going to lower my score to a 1. The higher low has me just a little concerned. You'll notice, like, am I thinking, we went from a 5.75 to a 5.5. Oh, what are we going to do? No. A quarter of a point is just standard fluctuations, a half a point, standard fluctuations, maybe even a 3/4. This is not concerning to us. This just says that we've seemed to have found what the market is right now. 5.5. Strong. Not the strongest. We've seen stronger, but it's strong. Yes, so there are 69 major candlestick formations. And I would tell you it's a huge mistake to go try to memorize them. Top 10. What do you see over and over and over again? Hammers, stars of any kind, shooting stars, falling stars, morning stars, engulfings, haramis, right? Piercing line, dark cloud cover, things like that, the transition. So if you go out and you say, hey, what are the top 10 candles? You might get 2 or 3 different lists, but most of them are going to overlap 8 or 9 times. And you found what you want to study. Those are the ones that you're looking for, 100%. Okay, 5.5, we're bullish. Okay, we're not going to have watch list time other than to go through it. And then I'm going to have to wrap it up, but I hope that those of you who are new are getting a taste of this. I'm going to go through the watch list pretty quickly. You'll be able to go back and see, but then I'm going to do, if you want to stick around, you can get a quick tour of Discord so that you can even start downloading a few things that will help you with the group. So I am going to just run through the watch list and let's start flagging everything that we like. Apple on the list. Love it. Strong AI move. Great announcement. Market loved it. I'm looking for the next opportunity to jump on this thing. AMD just hasn't done it yet. It's not there. Amazon. Yes. In fact, Amazon gave a signal. Theoretically on Thursday, confirmed on Friday. That's been on our list this whole time. AVGO on the list. Another split stock. You can see what's happening with Apple, with AVGO, a consolidation. Great. As long as it consolidates into gives me a higher low above this 50, I'm going to be fine with it. I'm going to be absolutely fine with that. AXP, I'm concerned about financials. I know that we saw it on the sector rotation, but if you've been trading financials, you know there's been some lack of momentum. And you can see it here as we broke the 50, got lower. Now we're hitting the underside of this thing, and it's looking sickly. Boeing, you could absolutely, and I'm going to put it on the list. You could absolutely make an argument for Boeing. It just made a higher high, and now it's making a higher low. It's steady for a nice, potentially moving uptrend, I guess. BAC, I closed mine. For a small loss. It's still above the 50, and I would still maybe think about it again if it like stabilizes at or above 39, because I do think financials are going to recover, and I think something like BAC, Citigroup are going to be the leaders. But I took this trade and then I closed it down. I think others may have held on. It still looks pretty bullish, but I just didn't like holding it over the weekend. We'll see what happens there. Citigroup under the 50, that's hard. I think if I'm going to do anything, the next place we're going to have to do some searching is going to be financials as the dust settles in financials. Caterpillar, nothing there. Colgate-Palmolive looks great. I got a piece of this, very small piece of this. It did a little flag and turned. I did not catch this one. And I'm a little bit disappointed in myself that I did not. Chipotle, the split is this week. A little pre-split pullback. It's going to be a 50 for 1. So this is going to be a $62 stock here pretty soon, right? $61 stock pretty soon. And the trend looks great. So I am absolutely putting that on my list. Under the consumer. Oil, nothing there. Costco, love it. On my list for consumer. Consumer are all going together for me. I'm not distinguishing discretionary versus staples. So Costco, Walmart, Amazon, CMG, anything consumer, it's all going to go together. DAL, maybe. DIA. Here's EQH. I will put EQH with Bank of America for financials. Materials seem down. GBTC down. GE. It's really turned sideways. I tried a couple of trades. Lost on one, made on one. Never got the third. It's not looking all that exciting, to be fair. Gold, no. Google. I like Google. I like Google. So, sorry, give me just 1 second. I'm trying to find one thing here. Okay. I think Google's valid. I think if you were thinking about getting in it and it still looks like this come Monday, it's a valid setup. Sorry if you're chatting. I can't really see the chats right now. HIMS looks great. We've been seeing if that would ever pull back. Now it is. That's consumer. KB Homes, Coca-Cola, yes. I actually almost put an alert on Coca-Cola on Friday, but that's a valid looking entry signal right there. It's a matter of can we get in on Monday. Meta on the list. I think Meta is setting up for a trade. Definitely want to trade Meta or Google next week. MFC. See, that's what I mean. The financials are so lackluster right now. MMM, like Colgate Palmolive, looks pretty good. Morgan. I would still trade Morgan if it can hold above the 50. I'd put it with those other two. Microsoft, definitely on the list. Love Microsoft. Micron, no. Why? Because of his earnings. It's just not time. I guess I'll put it on the list, but carefully so. Netflix. It's overextended. It was on our list last week. NVIDIA, yes. This pullback is exactly what we're looking for. PLTR, yes. So we have a pretty strong list. RTX, industrials, that's valid. It hasn't moved very quickly. You could still probably think about this one off of a Heiken Ashi right here. Yeah. Okay. TSM, yes. Now, obviously, there's a lot of chips in here, so you're going to pick one, maybe two. Here's another concern of mine. I don't like that the dollar is breaking above 29. It's going to be hard for the market if it doesn't drop back into this like 28.50, 28.75 range pretty quickly. Here's the VIX, and let's finish up with Walmart. And Walmart is going on our list. So a lot of good, strong, sector-leading stocks with high liquidity. So if anyone's like, oh, there's only 5 stocks that are making this market bullish, what are you talking about? Look at our list. Look at the list we just had. Apple, Broadcom, Microsoft, Micron, NVIDIA, Palantir, Taiwan, Amazon, Chipotle, Costco, Coca-Cola, Walmart, Boeing, RTX, Bank of America, Morgan Stanley, Google, Facebook, Colgate Palmolive, and 3M. 5 stocks. What the hell are you talking about, 5 stocks? That's a lot of stocks. That's some breadth, my friends. So, yeah, there are signals. There will be alerts. So be looking for them. Remember, the alerts might come out pre-market. They might come out intra-market. They might come out last hour of the day. Those are the 3 times. If you get one the last hour of the day, still valid the next day. In the morning, as long as the parameters are still in place. Real quickly, let me now just do a quick little tour for some new folk. I hope they're all still here. I haven't really been paying attention. They might have dropped off and like, you lost me, Scott, I'm out. I hope not. Don's still here. Love it. Okay, real quickly. Remember that the events are going to change this week. I'm going to send an alert out today and tomorrow. We're going to move the schedule to start a half an hour early to accommodate for a longer Tuesday, Thursday session. Remember, Tuesdays and Thursdays are going to start at 8 p.m. Eastern. Glenn is going to take us on a On Thursday, he is. But we're going to start doing a beginning presentation and trading, and then we'll do an intermediate and advanced with Q&A sessions. It's going to be great. Now, what else? Ask a question. Tracy T, I love it. Tracy T, I will be coming in to answer your question here later this morning. Amazing. Thank you for putting that in there. Brand new to everything, Robinhood. Oh my God, that's such a, can I answer this now? I'm going to answer this now. I do have a Robinhood, but haven't been given access to options. That is okay, because we learn to trade stocks first. Then we move to options, because options are a derivative. Do you stay in the class? Yes, 100% you stay. And you keep learning, periodically apply for options. Yes, you always have the ability to test another broker. For example, what you could do is go open an account at Charles Schwab, and they'll say, oh, you don't have to fund accounts when you open accounts. Eventually, they'll close them if they don't ever get open, but you can open an account and then say, I want to test the platform. And you can actually download Thinkorswim. And they have a paper account so that you could paper trade options while live trading stocks. Yes, you stick around, you learn to trade, because what we do is learn to trade. The vehicle is the last consideration, Tracy. The last consideration is, oh, am I doing a stock or an option? That's the last thing. Do you open a whole new world of learning with options? Absolutely. And it is a magical world. Like, imagine, the way I picture it is kind of like Willy Wonka's chocolate factory, only better because it involves options. So I know you guys are probably like, don't agree, but it is. It's a lot of fun. So that's what I would say. Oh, and your next part of your question, something better for options trading that are just, if these questions are not allowed, every question is allowed. We don't ever disallow questions here. I love Thinkorswim, Tracy. I'm not like, oh, I recommend this. I love it. I trade on it. You see that I trade on it. I've traded on it for years. I'm with Charles Schwab because I want Thinkorswim platform. I was with Ameritrade because I want the Thinkorswim platform. That's how I see it. Obviously, you get to watch the Thinkorswim platform a lot through this group. So it kind of makes sense, but I'm going to leave it up to you. It's up to you. Fidelity has a great platform. Tastyworks, great platform. There's great platforms. Interactive Brokers has a platform. Sandy wouldn't call it great, but it's a platform. So, yes, that's what I would say. I'm going to come post it here too, just so people who come in and read it and didn't listen get to see it, but thank you for that. Market Watch chat, same thing. Get in here. You have so much available to you. Resources, links for the market posture analysis. There it is. You click this, you're going to get the exact chart I was looking at. And then all you got to do is change the time frames. If you want the stock one, or if you want the sector rotation, it's right there. If you want the basic search, it's right here. If you want our content library, there's a lot here for you. If you click this link, you'll come in here. And you can come in and watch videos on the trading plan, watch videos on the market posture, each routine, what do we do, trading foundations course, brokerage accounts and platforms. Tracy, if you want to see what I go through on these, there is all kinds of, all you have to do is just prepare yourself to have to listen to me. If I don't drive you nuts with my speaking style, then you should be fine. I try to keep it light, tell a joke here too, tell a joke or two here and there, and really dive into the meat of the information. Options Foundation, there's actually double this, Tracy. There's 16 videos now. I need to get this updated. So you are reminding me that I owe you guys that, and I will make that happen. So play around in here, ask questions, ask members, connect with us. You can connect individually, find a trading partner, pop in and join these different events. Come hang out tomorrow night for cocktail hour, where all we do is just hang out and talk and just kind of get to know each other and ease the pressure of what it is that we're doing here. Okay, so I've gone 13 minutes over. I apologize. I wish I could tell you that doesn't happen very often, but I talk a lot. That's who I am. Let me go back and make sure I can see what everybody's saying. Okay, awesome. We're good. Thanks, everybody. Those of you who are new, glad to have you. I hope you stick around. I know it can be a little bit overwhelming, but join us tomorrow morning to see how we start putting this together into market action, and then tomorrow night, cocktail hour. Thanks, everyone. Have a great rest of your day. As always, happy trading.